Thank you so much for dialing into this A4S Access Finance webinar focusing on TCFD and looking at implementation of the recommendations. We do have a lot of people registered for the call today, so can I please ask that you mute just to limit any background noise or any feedback sound. However, please do use your video where possible so that we can see your faces. It's good to know who we're talking to. Please note that we are recording this call for others and that it will be available on our YouTube channel and on our website. This webinar has both A4S Academy and non-Academy participants, and you are all very welcome, so thank you for joining us. Now, before we begin, I would just like to run through the ground rules of a productive virtual session. I know we're all very used to this way of working now, but it's always useful to run through it again. So please stay as engaged as possible. We do have a lot to cover in an hour, so please keep contributions relevant to help us stay on time. Do ask questions freely in the chat function. I will show you where that is in a minute. And finally, we do welcome any additional members of your household who would like to learn, including pets and children. Everyone is very welcome. So I'll just quickly run through the learning objectives of the call today. So after completing today's course, participants will be able to describe the recommendations of the Task Force on Climate-Related Financial Disclosures, articulate the business benefits of implementing TCFD, and be able to translate the experience and learnings of others to your own work. Here are the voices that you will be hearing on the call today. So I'm joined by my colleagues, Helen and Elizabeth from A4S, and we are delighted to be joined by Wim and Beth and Fernanda, who you will hear a little bit more from in a minute. So before we dive into the content, I'll just do a very quick intro to the Zoom features that we'll be using today. As I said, please do use the chat function to ask any questions, or if you have any technical challenges. You should just see me writing hello in there. You can find this at the bottom of your screen. We will also be using the polls throughout the call, and this is necessary for those of you who would like to claim CPE points. In the interest of time, please be speedy in your answers. So we will just test this really quickly. So first one is here. Which discipline do you work in? Is it finance, sustainability, risk, strategy, or other?
It's strategy.
Great, thank you all for being very quick with this. I can see them all coming in now, which is fantastic. So here we go. We have the majority of you from finance and some from sustainability, which is great. Okay, so one or two more, in fact, just to help us get a quick understanding of where you are in your journey around TCFD recommendations. So to what extent does your organization currently disclose in line with TCFD recommendations? You see the various options there. This will just help us get a view of where you all are. It's getting quite a range of answers coming in here, which is useful and interesting for us to know. Okay, just a few more to come. Great, so it looks like a few of you are sort of at the midway point, really starting to consider some of the pillars, and for some of you, you're a little bit earlier on in the journey. Hopefully, we can all learn some useful things from this call today. And then finally, this one is more about you. How much direct influence do you personally have on moving your company towards fully implementing the TCFD recommendations? So again, a little bit of a range here. Thank you everyone for that. That was really helpful. And hopefully that's shown you how to use the poll function. So I will now move on to the first of our sessions. And I'm delighted to welcome Wim Bartels, who is a partner of corporate reporting at KPMG. And he is also a member of the Task Force on Climate-Related Financial Disclosures. So welcome, Wim. So can you give us a very brief introduction to the TCFD framework?
Yeah, sure. I think if I see the answers to your initial poll questions, many do already know what the TCFD recommendations are about. But it was designed as a disclosure framework to inform in the full financial investment chain about the financial risk and opportunities from climate change. It therefore addressed these four pillars that you see on screen. First of all, answering the question, to what extent have you addressed climate risk at the right level? Then what are your risks and opportunities, and what are the potential implications of them for your business? To what extent and how have you integrated climate-related risk and opportunities in your risk management processes, and do you monitor the risk from climate change? And then finally, what are the metrics and potentially targets that you have set to address these risks and opportunities that you have identified? That's it really in a few sentences. As a disclosure framework, as I said, because, and we should remind ourselves of that all the time, I think, because in the end, it was seen as a potential risk of financial stability, and that's why the full investment chain from non-financial companies through to lenders, banks, insurance companies, asset managers, asset owners, up to central banks should be interested in this information. And then in reality, I think, unless we might touch on that a little later, but then it became a reality, I think, much more of a business management framework than a disclosure framework only.
Yeah, great, thank you. And so thinking about the business, what are the business benefits of implementing TCFD?
Yeah, there are a number, I think, as I said. So, first of all, we see increasing interest from investors asking for this type of information. So working with this framework, first of all, of course, allows you to respond to their increasing needs for this type of information in order to assess their own risk. In addition, I think, and we touched on the business benefits earlier already, that is much more than disclosure. And I've learned that in my own practice over the past year or two, that it really helps to understand better what climate risk and opportunity is about, and how you should integrate it into your decision making. So it helps you to improve in strategic planning, to take better strategy decisions, which is much more than the disclosure framework. And we have seen that it really takes some time before you really kind of get to grips with it and grasp what it really is about. Then I think, and specifically for those in the UK, you are aware that the TCFD is under increasing regulatory attention, so it will become mandatory in the UK, but also in other jurisdictions. We did honestly not really foresee that, I should say. It was the purpose to have a voluntary framework for business, but the regulatory action is really very, very prominent and on the rise. The EU will come out with similar regulations shortly, I think. I think also in addition to those benefits of being prepared for regulatory action, being prepared for investor demand, it also helps you to get how should I say, create greater confidence amongst investors and lenders, because you report and they get a kind of at ease if you say, we have addressed it at the board level, we know our risk and opportunities, and we are working on improving our understanding what it means for strategy. I think, yeah, in short, that is what some of the key business benefits would be about.
Great, thank you. So you mentioned about becoming potentially mandatory in the UK and having a think about our poll question from earlier. I think some participants are starting to think about what they might be doing, and some are maybe a little bit more advanced. In what areas are organizations doing well, but what areas are posing challenges? And are there any resources that you would recommend to help them, and thinking about scenario analysis and that sort of thing?
Yes, sure. So yeah, first of all, we see many companies starting And at the same time, the uptake is has still some room for improvement, if I may say so. So we release with the TCFD status reports for the second year we have done now in 2019, and we will do very shortly for the third consecutive year to track, like, you know, what is the uptake. And what we see is that many companies start with governance. That's, I think, relatively easy, so to say, to describe. And many companies have addressed risk and opportunities. I should make a caveat there. They have addressed climate-related risk and opportunities. We are not sure, we just don't know whether that list is complete and whether that is addressing all the relevant material risk and opportunities that there are in financial terms. And also not sure whether these are all addressed on the right terms. So as included in the framework, you need to address it at short, medium, and long term. And whether, you know, that whole, let's say, set of horizons has been covered is something we can't track yet with the task force. But we see companies addressing their risk and opportunities. And the strategy pillar, to a large extent, is one of the most important ones, if not the most important ones. If investors understand your risk and opportunities and what it means for your business, the rest is, let's say, more the integration, and but this gives them a very good understanding of what's going on. This is also where we see some of the biggest challenges, which is scenario analysis, or what are the implications for my strategy. Not for strange reasons, I would say, you know, it is really very new to most companies to work with scenario analysis. It's complex, it's future oriented, there's a lack of data, there's a lack of granularity, so there are many, many issues with it. And that creates, of course, the challenges that many companies face. So scenario analysis is one of the big challenges. The other challenge that we see is in risk management. Whereas, of course, you know, most companies, if not all, have risk management processes. We have seen so far that the way of describing it and the way of really integrating seems to create challenges. So what we are currently developing, and I think that relates to your question on sources, and I have to say in that regard, this webinar is a little early because it takes us another month before it comes out. But the TCFD is releasing guidance. This year, we will be releasing further guidance on scenario analysis and how to take the process of scenario analysis into your organization. And we will be releasing guidance on risk management. That, of course, will be available on the TCFD website. That is the first source to go to, but there's also another very important one being hosted in the UK, the TCFD Knowledge Hub, where materials, toolings, relevant literature is all available for everyone who wants to get a better understanding. So if I were to say what are the major sources, I would say these are the major sources: TCFD Knowledge Hub and the overview as been provided at the TCFD website. Just checking whether there's anything else in terms of challenges. I think in the financial sector, we see one other challenge there, which is how to report on Scope 3 emissions. We didn't touch on it, but it's on screen. It's a separate recommendation on Scope 1, 2, and Scope 3 emissions. And that was specifically for the financial sector to have a sense of the level of risk that that these companies face. We all know that this is not the indicator for risk, but it's a kind of a proxy. And many started with 1 and 2, but we also know that most emissions are for most companies in Scope 3. And we need to have a better insight into that. And we experience that, that specifically in the financial sector, that is a challenge to kind of reasonably assess the level of Scope 3 emissions.
Fantastic, thank you. So obviously you told us a little bit about new guidance coming out and the potential around regulation. are there any other key developments in TCFD that people and organizations should be aware of?
Yeah, so I think, you know, as you say, but just maybe to put it in a bit of a wider context. So there are a number of regulatory initiatives, and really in different places in the world. So we touched on Europe, and Europe is, well, I would almost say again, a kind of leading with implementing these. But we should not forget that in Asia also a lot is happening. Hong Kong, Singapore, Japan are all let's say strengthening regulation. New Zealand has just said they're gonna make it mandatory, as in the UK. So on a global scope, I would say there is increasing attention from regulatory bodies, from stock exchanges, from central banks, not to forget the Network for Greening the Financial System, where 60 central banks get together. So this whole regulatory environment will be implementing this in the years to come. That is the one overall. The TCFD, as we already touched on, will be increasingly release guidance. We see that we need to do more on that to help companies really get over the hurdle, if so to say, to start off with this, and therefore increase the uptake. And then finally, maybe as a relevant development, not so much only within the TCFD, although we discuss it at each of our meetings, is the investors development. So I think the attendees today will be aware of the Climate Action 100+, where about 40 trillion of assets by, I think, about 450 investors or so are looking into getting us all on a Paris Agreement, a path ideally a 1.5, and they are being increasingly vocal, not least because, of course, because they see the financial risk for themselves, but I must say there's also many with an intrinsic kind of motivation to get this right. And the same applies to, for example, all signatories to the Principles for Responsible Investing. They have a kind of agreed between themselves to now report against the TCFD. But of course, TCFD reporting doesn't come without further action to demonstrate progress. So the investors world, I think, is really also the one to watch, I would say.
Good note to end on. Well, thank you very much for providing the overview and the update. So we do have some time just for questions. If anyone would like to write a question in the chat function and then come off mute and ask the question. So I do have one here from George Cobb. George, do you want to come off mute and ask Wim your question?
Yeah, thank you. It was just an update, so I haven't read some of the recent literature, but where are we in terms of the sort of maturity of the TCFD, and sort of how many companies globally are now using it?
Yeah, that is, well, we should split her, I think, between supporters and users, first of all. So the TCFD has about, I think we're now at over 1,300 supporters, and those are the global ones, and we are very, very proud of it. But we notice that there's much to do in terms of reporting. So the upcoming status report will demonstrate further progress, and we track about 1,700 of the largest companies across the world, I should say, within the G20. And the numbers are somewhat encouraging and disappointing. So we see further rise. But if you ask me, like, how many are reporting, I'm not sure, by the way. We have one number within the TCFD because we don't have all the companies inside, but it will be about a quarter of these. So let's say, if I say 500 to 750 who are really reporting against it, that is about it, I think, at this very moment. Again, taking into account the upcoming regulation that will quickly rise, we assume, but it's still, yeah, relatively low, and that is also, yeah, one of the concerns of the TCFD members. Everyone talking about it, everyone very supportive, but, you know, where is the real implementation?
Thanks. And we've had a question from Fred Newland, if you want to come off mute.
Hi, Wim. Thank you very much for your very good introduction. My question is very simple and maybe very complex to answer, but is there any coordination between TCFD, UNPRI, Climate Action 100 Plus? It seems that there are plenty of initiatives, but as an end investor, and I represent one of them, it is difficult to prioritize and to see where to look first because there's so many of these initiatives. Maybe you can elaborate a bit on that.
Yes, and maybe I should again make the context a little wider. But first, to answer your question, so is there a coordination between TCFD, UNPRI? I think similarly between TCFD and CDP, also a very important mechanism for reporting and disclosing. There is some, so that's to say, the chair of the UNPRI is a member of the TCFD, so he will make sure that it's all aligned. If it regards TCFD recommendations, the same for CDP in terms of alignment, although CDP is not a member of TCFD. Then Climate Action 100 Plus. To a limited extent, there are members of TCFD who are also members of Climate Action 100 Plus, but that's not a formal alignment. And I think, to your question, the TCFD does not have any formal mandate, so to say. So we're not a standard setter, so we can't, let's say, mandate UNPRI to do it in a certain way or any other organization. The TCFD and particularly the Secretariat is very willing to get this as much aligned as possible across the globe. So they're doing what they can, but there's not really a formal coordination to answer your question. And then maybe in addition, and that's the wider context that I referred to in the start of my response, is we also see a further harmonization in reporting more generally, which goes much beyond climate and is now starting to involve the A4S Foundation. They will come out with a consultation very shortly over the coming weeks to assess whether the foundation should pick up harmonization of non-financial information, ESG information more generally. They will start with with climate expectedly, and also there are close connections between the TCFD and the A4S Foundation to help them understand, to help them with understanding how they can work with TCFD. But again, and coming back to the very start of your question, it's not a formal alignment. It's really, call it the willingness to get as much alignment across the world as we can.
Okay, thank you.
Thank you, everyone. Thank you, Wim. So 2 quick poll questions, just to make sure that you've all been paying attention. So which of the following are recommended disclosures under the TCFD framework? It's multiple choice, so if I can ask you just to fill this in quickly. Great, thank you very much. So in fact, they all were, apart from impact of climate on key stakeholders. So some of you need to revise a little bit more. And then one final question. What are the business benefits of implementing TCFD? Great, fantastic. So many business benefits. So thank you everyone for completing that. We really appreciate it. Wim mentioned various resources from TCFD, which we will be sending around following this webinar. A4S also has various resources on TCFD, so looking at top tips for finance teams. We also have various practical approaches which have been tried and tested by members of our CFO leadership network. We'll also have a maturity map where you can measure where you are on your journey and have a think about where you would like to get to. So we will be sending those following the webinar as well. So I would now like to hand over to Helen for our next session. Oh.
Sorry, what was that, Vin?
I was about to say, sorry, Liz, I should have mentioned that first, of course.
Don't worry.
And clearly the best resources out there. Now, on that resources, we've obviously got a number of case studies that we have out on our website. We have case studies, for example, from Tesco, from Unilever, from SSE, and from Verizon. And we're very fortunate today to be joined by Beth Sasfai from Verizon, who's going to talk to us about their implementation of TCFD. So Verizon is headquartered in the US and is one of the world's leading providers of telecommunications. They have over 135,000 employees and provide connectivity to their business customers in more than 150 countries. So earlier this year, indeed on the 50th anniversary of Earth Day, they published their first TCFD report. Now Beth is Senior Vice President and Chief ESG Officer at Verizon, and has very kindly offered to answer our questions today. So welcome, Beth, and thank you.
Thanks, Helen.
So first of all, for a little bit of context, can you tell us how the ESG team and the finance team work together on the implementation of TCFD? And in particular, what is the role of finance and what value do they bring?
Sure. Why don't I set the table for you a little bit and let you know kind of where the ESG team sits and how we work with finance generally, and then I'll talk a little bit about the TCFD report specifically. Right. So at the end of last year, our board of directors and our CEO and leadership team expanded my governance role and asked me to build out a dedicated team of lawyers and sustainability professionals to enhance Verizon's reporting and engagement on ESG issues that align with our core business strategy. So the ESG team sits in the legal department under our general counsel and head of public policy. He and I are both liaisons to the Corporate Governance and Policy Committee of the Board of Directors and brief them regularly on issues involving ESG and reputational risk. And our cross-functional team handles governance, legal support to external reporting and investor relations. We handle ESG reporting. We also have some substantive areas, human rights, digital safety, and environmental sustainability. So our finance team works very closely with the ESG team on setting, measuring, and reporting against climate commitments. In particular, I support our CFO, Matt Ellis, on various sustainable finance-related task forces, including the United Nations Global Compact Task Force, where today the CFO principles on integrated SDG investments in finance are going to be launched later. We're very excited about that initiative.
Indeed. And we've been involved in that as well, so great.
Yeah, a great partner in that initiative. And I also support Matt, with his work on A4S, which we've both found to be really useful in terms of identifying best practices that other member companies are adopting that we can consider in-house. The finance team and specifically the treasury team work very closely with the ESG team in terms of procuring partners to fulfill our renewable energy goals. So they manage risk, for example, related to renewable energy exposure through procuring renewable energy purchase agreements that we finance via green bonds. And speaking of green financing, last week, the ESG team partnered very closely with Treasury. They launched our second green bond offering that raised about $1 billion in net proceeds. We worked with them to publish a green financing framework that aligns to the United Nations SDGs. And we also partnered with Treasury on a pre-deal ESG roadshow that we gave for our fixed income investors. That was a very close and collaborative exercise. One of the other less obvious ways that we work with the finance team, which I wanted to mention to folks here, is to leverage their expertise and their experience concerning reporting processes, procedures, and controls. So as we move toward more robust ESG disclosures in TCFD, but otherwise as well in our ESG reporting and various other indices, we've become very focused as a company on making sure that the right controls are in place relating to ESG data and reporting. So our ESG team partnered with the Sarbanes-Oxley experts in external reporting and our finance group to really help us think about controls and processes that we can adapt for ESG data and reporting. And that relationship has been something that's been really invaluable for us, specifically relating to the first TCFD report that Verizon did. We partnered with finance on the development of the strategy section of the report. They helped us identify the company's short, medium, and long-term risks through our enterprise risk management program. And they also helped us simulate financial exposure in our carbon policy scenario. It's really important, I think, for whoever is working on your TCFD reporting to partner with finance, because disclosures in that report really inform and impact other disclosures in external reporting. So I think collaboration is key. And just finally, I would say at Verizon, with respect to our TCFD report, we needed sign off of that report from our disclosure committee. They review and approve any external facing reports prior to publication, and that committee is a finance-based committee. It's composed of our controller, our head of internal audit, our head of investor relations, and our company's lead securities lawyer. So those are some of the ways we partner with finance.
Great, thank you. And maybe you could tell us a little bit about why it was important to you as an organization to implement the TCFD recommendations. You know, what were those key business drivers?
Sure, a few things come to mind. So, you know, Verizon was a little bit of the way down the path, right? We'd already set some specific climate goals. We have a goal for half our total electricity to come from renewable sources by 2025. We have a goal to become carbon neutral in our operations by 2035. But what we hadn't really done was put these goals in a strategic context. So when we started looking at the TCFD guidance, we recognized that that reporting would really help us connect our existing climate goals to our long-term business strategy and our risk mitigation strategies, and give us a way to talk about those both internally and externally. We also knew that developing our climate-related disclosures was something our investors really cared about. Like many on the phone, I'm sure you have heard your major institutional and socially responsible investors request those sorts of disclosures from you. For us, there was a really strong consensus amongst our main investors around the TCFD framework, which we were very thankful for because it allowed us to move forward. So with our TCFD report, we really wanted to be responsive to our investors' requests to understand more about climate-related risks and opportunities, and also about Verizon's climate resilience. A little more on our investors, because that really was a big driver here. We spent a lot of time engaging with our key investors before we settled on how we were going to report. Would it be a separate report? Where we were going to report, and what we were going to report. We were very transparent with them about our planned approach, the themes that we wanted to emphasize, the general kind of scenario analysis that we were thinking of pursuing. We were pretty open about some of our challenges with them in order to set expectations up front. And so from these conversations, we learned a few things. We discovered our investors really wanted our climate reporting to highlight the resilience and the efficiency of our network. So those became major themes in our TCFD report. And we also found that talking to our investors helped us prioritize in important areas. So for example, in terms of our scenario analysis, those conversations gave us an opportunity to explore with them why we thought it made sense for Verizon to start with a scenario analysis that focused on the impact of carbon policy. So, overall, we found our investors to be very collaborative in these discussions. A lot of them are working on the same issues right now. So I would just really encourage others who are not already doing so to kind of take the plunge and have some of these conversations, because for us, it really helped us move forward.
Great, thank you. And that engagement with investors really comes out in the case study as well. So if anyone is interested in that case study, again, is on our website. Scenario analysis comes up repeatedly as a challenging area for reporters, and Wim mentioned it again earlier. Can you maybe tell us how you went about developing your scenario analysis and what your key learnings were out of that?
I agree, it's challenging. So, fundamentally, right, the objective of the scenario analysis is to clarify how your company is exposed to risks and opportunities created by transitioning to a low carbon economy. We found the scenario analysis component of the TCFD recommendations to be the most daunting initially. But we decided to work with a consulting firm, which is something my team had never done before, that had gone through this with other large clients to kind of streamline our process and help us get off the ground. So we used PwC to help us model how carbon policy and resulting carbon prices created financial exposure for Verizon, what we call carbon price exposure in our report. And one of the things that came out of that was, rather than having to figure out how to develop our own view on the carbon policy landscape and what a 1.5 to 2 degrees Celsius world looked like, we, with PwC's help, were able to select a third-party scenario that aligned with TCFD approved scenarios and helped make our disclosures more accessible and comparable for our investors. There are a lot of different scenarios to choose from. We opted to choose a sustainable development scenario from the International Energy Agency for a few reasons. Once we did some initial work with PwC, we realized that we wanted a scenario that was pretty practicable and digestible and resonated broadly to a range of internal and external stakeholders, and that would also kind of give us valuable and actionable insights for Verizon and a foundation on which to build. And that really did that for us. So, the outcome of our scenario analysis is that even with growth in electricity usage and carbon prices and electricity prices, Verizon's resilient in a carbon policy environment, due in part to our strategy to reduce our energy and our carbon emissions, and also to procure significant renewable energy. So I would encourage others not to feel paralyzed by some of the complication and complexity. It is a nice piece that you can use some outside help with to get yourself off the ground.
Great, thank you. And I guess for those who are on the call who are just getting started, certainly that early poll showed that somewhere early on the journey, what top tips would you offer them?
Got to get support at the top from your leadership team and the board, because this is such a cross-functional exercise that you need buy-in across your business in order to get people to talk to you and work with you and contribute to the report. So I think support at the top is essential. Talking to your investors, as I mentioned before, they're very collaborative. Don't be afraid. Share your plans with them. Make them your partners so that they have some skin in the game with you, and just be transparent with them. I think you want to plan your resources. Getting the resources you need for a TCFD report can be a challenge. You really do need a team that can gather information and data. You also really need to upfront alert your subject matter experts that you're going to need their time and input. We found that it was not an insignificant amount of time, in particular because we also wanted to educate them on the TCFD principles at the onset. And then I would just encourage you to draw in external expertise if needed, as I mentioned with the scenario analysis. And overall as a company, you know, use your TCFD exercise to think about your climate goals and how they help you with your sustainability strategy. We found it to be a really useful exercise.
Fantastic, thank you. So we've had a couple of questions come in from the listeners. So Chris Main, I believe you have a question. Please feel free to unmute yourself and ask this question.
Sure, thanks Beth, this has been really helpful. Did Verizon consider including the TCFD report in another document as opposed to putting it out separately? That's something that our investors have been asking. Certainly is a great deal of focus on integrated reporting at the moment.
Definitely there is a great deal of focus on integrated reporting, and it is something we thought about and we talked with our investors about. And while I won't say we would never do that as an initial matter, given we had some issues about timing and when data is assured and when things are available, and it became very clear to us that putting out a separate standalone TCFD report on timing that really worked with that was the best way to do this initially and get everyone aligned. I think integrated reporting comes with a lot of its own challenges, and for some companies is why they're not kind of starting to report. And so I think you can take an iterative approach, and our investors were very supportive of that.
Great, thank you. And maybe one final question from Daniel. Daniel, if you want to unmute yourself and ask a question.
Hello everyone. Hi Beth. I'd like to ask, what tips do you have for startup organizations who do not have the competencies or financial capacity to carry out financial disclosures and ESG disclosures? What tips do you have for them?
I love your question, because I'm sitting at Verizon with a lot of resources and we still feel very stretched, right? So I think the most important thing to start with is to prioritize. I think you got to figure out what are the 2 or 3 things that are core to your business strategy, those ESG issues that you really need to be talking about, and lean in there. You cannot possibly do everything. And I think you need to just be prepared to express that to your investors. I think you want their alignment on what those 2 or 3 things are. I think you start there, and I think you get some outside help on the initial ramp up, because it really is a lot of resources, and it's also taking operational data and reporting it, which is not something that is easy to do either. So I'm very sympathetic.
Thank you. And thank you, Beth, for all your insights, and thanks to Chris and Daniel for your questions. So just to check you've all been listening, we have a quick poll question. If one of you can make that, thank you. What were Verizon's top tips for implementing TCFD? And while those answers are coming in, Vijay, I've seen you raised your hand. We'll come back at the end if there's still time after our final presenter. We'll come back to you for further questions. Great. So most of you heard the top tips there. One of the things that Beth did say, there was engage your board right at the start, not just when you have your disclosures written up. So thank you. And if I can just hand over to the next section to Elizabeth. Thank you, and thank you again, Beth.
Thank you, Helen. I'm very pleased to have Fernanda Amemiya with us in this session. So Fernanda is the Sustainability Reporting Manager at Landsec. Landsec is a commercial property company in the UK with a portfolio value of £12.8 billion. So their portfolio covers a diverse mix of offices, retail, and specialist spaces. So back in 2017, when the TCFD was launched, Landsec made a public commitment to assess and mitigate climate risk across their portfolio. And they started reporting against the TCFD framework in their 2018 annual report. And since then, they have continued to align the disclosures with the TCFD recommendations, and they've also evolved their strategy to address climate risk and opportunities. So back in November last year, they announced their commitment to becoming a net zero carbon business by 2030. So welcome, Fernanda. Maybe to begin with, can you tell us why it was important for Landsec to make that public commitment quite early on to implement the TCFD? What were some of the key business drivers?
Sure, yeah, thank you, Elizabeth, for having me here. It's a pleasure to be able to chat about TCFD because I think we are all trying to learn a little bit more about it. So as you said, we set the committee very early in the process, basically when the recommendations, they were open to public consultation. We had a look and we saw that that was an opportunity for us to set a commitment to start adopting the recommendations. So we start assessing and mitigating physical and financial climate change risks to our portfolio. And for us, the main business drivers were first to show leadership in addressing climate change. So because that's how we are, it's a kind of our approach and our aim when we talk about sustainability and climate change. So we want to take a leadership approach. For instance, since in 2016, we became the first property company in the world to set a science-based target. Since 2016, 100% of all electricity we procure is back renewable electricity. So the commitment to align our disclosure with TCFD was part of our wider work in addressing climate change. But one thing that is important about TCFD is that it changed the conversation. So I think, as Beth mentioned before, our climate resilience program so far was what should we be doing about climate change? So what's our role in mitigating climate change? We haven't thought about what are the actual risks of climate change to our business. So what do we need to do to mitigate climate change and to adapt our business in case we have an increase in windstorms and flood. So how can we be prepared for climate change as well? So that's the second reason, is part of our risk management process. We need to make sure that we fully understand what are the financial impact of climate change, to make sure that we have all the mitigation and adaptation plans in place. And for Landsec, that is particularly relevant because, as you said, we are a real estate company, we are a property company. So we develop buildings that they are typically designed to last over 60 years. So when we are designing a building now, we need to make sure that they are going to be resilient and they are going to be able to cope with future weather patterns. So we need to make sure that the facade can withstand increasing windstorms, the amount of cooling and heating system that we have in the building is enough for a changing climate. So that's why for us, it's important to make sure that we are assessing the risk and we fully understand what are the risks of climate change. And another benefit of starting early is that you have time to learn. So basically, we started the journey in 2017. And if you ask me, our disclosure is not fully compliant with the TCFD recommendations. We are still learning. And every year, we make improvements. We do an analysis that we haven't done before, and we learn a little bit more, and we adapt our strategy based on new findings. So I think that's the important thing. You need to start. So, but I don't see that Landsec is going to finish the TCFD alignment process anytime soon.
Thank you. But we can see that over the years, your disclosures have evolved. And I think in the latest report, we can see there are, very comprehensive disclosures made in your annual report, as well as more details in your sustainability performance and data report as well. But I think in the time that we have, perhaps we can focus on the work that you have done on scenario analysis. Maybe you can tell us, how did you get started with scenario analysis and how has the work evolved in the past few years?
Sure. So in 2017, when we saw the TCFD recommendations, for us, it was clear that governance, yes, we already had a strong governance in place. So almost
think we might have lost.
Robust already.
Okay. Sorry, Fernanda. I think the connection we just lost you for like a few seconds. So.
Sure. What was the last time? What was the last thing you heard me saying?
Sorry, I was on mute. I think you were just telling us about how you got started with the scenario analysis.
Okay. So yeah, when we are reviewing the TCFD recommendations, we saw that the governance process, they were already in place. So that was fine for us. Metrics and targets, we already had a robust sustainability disclosure. So that was pretty much addressed. But one area that it was not very kind of clear for us, and we knew that we didn't have the internal expertise, was about assessing climate risks. So all the climate already had a strategy, a sustainability strategy and a climate change strategy in place, but we knew that based on new findings from any risk assessment process, we will need to adapt our strategy. So for that reason, what we did, we partnered with our group insurance partner, so Willis Towers Watson, because we knew that they had the external expertise to assess risks that are material to our portfolio. Yeah. And also we engage with lots of our internal stakeholders as well. So the teams from insurance, finance, investor relations. And when we started working with Willis Towers Watson, we assessed climate risks based on the 4 representative concentration pathways. So the 4 RCP scenarios. And basically we started with 4 scenarios, but then we simplified to 2 scenarios, the 2 extreme ones. So the best case scenario, where temperatures increase by less than 2 degrees, and a worst case scenario where temperatures increase by more than 4 degrees. So that's how we try to assess the physical risks to our portfolio. We then look at both scenarios, considering both a short, medium term until 2030 and a long term beyond 2030 until 2100. And because the science behind climate change continues to advance, so every day, if new things are coming up, new findings, new metrics, new data, we have already undertaken this climate resilience assessment twice. So first in 2017, and then last year with the release of the UK climate projections 2018, we updated the analysis of physical risks again. And as I said before, this is a journey. We are working again with Willis Towers Watson this year to further improve our risk assessment and disclosures. So this year we are looking again at physical risks, looking at kind of some risks that they were not covered in our first assessments. And we are also looking at how to quantify better transition risks as well. So as I said, it's still work in progress. So in the next year disclosure, you're gonna see more, even more comprehensive TCFD disclosure.
Great, thank you. No, really interesting to hear about your journey. And I'm sorry about the technology. I think we're struggling to see your video, but we can still hear you very well. So just picking up on something that you mentioned about, using external expertise and also engaging with internal stakeholders. Can you elaborate a bit on the role of finance in implementing the TCFD? What were their main responsibilities, or what specific skills and knowledge did they contribute?
No, of course, yes. Because TCFD is all about assessing and disclosing financial impact of climate change, I believe it's clear the role that finance can play in implementing the TCFD. So since the beginning, we work first with our insurance teams to make sure that we had updated schedule of our assets. They are also able to provide a portfolio forecasting and analysis to assess our climate risks, to ensure that we had an alignment between the portfolio risk exposure and mitigation plans. The finance team also provided us with information on specific asset value to make sure that we are able to pinpoint what are the assets that were more exposed and what was kind of the portfolio value that are currently at risk of climate change. And so during the process, all these input were provided by finance. And then after the analysis, all the finds from the risk assessment are integrated into our strategic and financial planning. So if we see that temperatures are going to increase, you're going to use more energy, that is included in the financial planning as well. And we also work with our investment team to make sure that climate change risks, they are considered into all our investment decisions. As I said, when we buy a new asset or we want to develop a new asset, we need to make sure that climate change is considered. And the same thing when we are divesting from an asset. We want to make sure that climate change is integrated into the investment decision. We work with our investor relations and treasury teams as well to support the communication of a climate resilience work to equity and debt investors. So last year, actually earlier this year, we had our second sustainability roadshow, and we went with our investor relations team to talk with our investors, our key investors, about sustainability and our climate change program. And we discussed a great amount about our net zero strategy, our climate risks as well. So this is key, and investor relations and treasury team, they need to know what are our climate risks and what is our strategy to mitigate risk, to be able to communicate that to investors. And we also work with finance to calculate the financial impact of transition risks to future revenue streams, potential increase in OPEX and CAPEX, and a potential change in asset value as well. So as you can see, there is no way of a sustainability professional to develop and deliver a TCFD disclosure on our own. We really need everyone from the company with a particular kind of attention to the finance team and financial professionals.
Great, thank you, Fernanda. No, that was really helpful. As you saw at the beginning, I think quite a lot of the audience we have today, they are thinking about, how they can help their company to implement TCFD. You definitely gave us some food for thought there. So I'm just conscious of time. I think we need to close out this session. So thank you very much, Fernanda. If anyone has any questions for Fernanda, you can send that through to us by email, and we will try to follow up afterwards. So thank you, Fernanda, again. I'll just run a quick poll question now, just to recap what we've just heard from Landsec. So in what ways did finance contribute to the implementation of TCFD? Great, thank you. And in fact, these points are all correct, and hopefully you can take some of these away as you think about how you can contribute to implementing TCFD in your organization. So as a final poll question, which we always do at the end of each webinar, so how will you translate what you have learned in this workshop to your work in the next 6 months? Okay, great to see many of you are going to read the TCFD recommendations report and also the A4S resources, which we'll be sending to you as an email after this session. So thank you once again, and I'll now pass over to Lizzie to wrap up.
Great, thanks so much, everyone. Just to say thank you again to our speakers. Sorry for running over a tiny bit, but as we said, we will send you some follow-up material from this session. So our next workshop will take place on finance culture on the 23rd of October, which will be at 8 o'clock in the morning, UK time. We'll be joined by Javier Harvey, who is the CFO of Heathrow Airports, and Manjula Chumun, who is Head of Finance and Sustainability at Tesco. As I say, we have a few more of these coming. So we have just a quick feedback question, which I will leave with you, and I will say farewell and ask that you just complete this before you sign off. Thank you all so much.